All right. Welcome everyone to another episode of Hawaii Island Realtors Hot Topic Series. Today's episode is insurance industry insights and updates and insurance issues. Before I introduce our speaker, I have a few instructions for today. Please, if you are able, please turn on your cameras as courtesy to our speaker. Please keep your microphones muted when not in use. And finally, please post your questions in the chat to be addressed as soon as possible. Now, it's my privilege to introduce our speaker, Sue Savio. Sue is a trailblazer in Hawaii's insurance industry. She has led Insurance Associates, Inc. as president and owner since 1975. With decades of leadership experience, she has served as president of both the Hawaii Independent Insurance Agents Association and the Community Association Institute, or CAI, where she has been an active board member since 2000. Recognized with the prestigious Gurley Award for her distinguished service to the CAI Hawaii, Sue continues to shape her community through leadership roles on 3 condominium boards. We thank you, Sue, for presenting to our members. And now, everyone, let's welcome Sue Savio.
Thank you, everyone, for that nice introduction. I am going to, I was given some questions to answer, and I am going to go through that. And I want to kind of make it interesting for you and also not helpful. So if you have questions, please put them in the chat, and I'll try to stop and answer them as I go. If I forget, don't worry, we'll get them answered at some point during this spiel that I'm going to be giving you. So first thing I'm going to do is talk about how we're here and why we're here, and what's going on today in Hawaii and also in America, because what happens in America affects Hawaii. So basically, you all know we had that Lahaina fire, and that really messed up the insurance world. At the beginning, right after the Lahaina fire, the insurance industry was anticipating 50 to 100% increases. By the time they figured out what the losses were and what the cost of reinsurance was going to be, it turned out to be 300 to 500% for wood frame condos and 100 to 200% for our concrete condos. So we were way off on what we budgeted and anticipated. So what happened was, come 2024, rates skyrocketed. Boards could not afford 100% insurance of hurricanes, so many of them took a lot less. In fact, they say there were about 375 that had less than 100%. You'll be thrilled to know that's down probably to 100 today, but we'll talk about how we got there. And of course, the rates skyrocketed. Premiums were very expensive, very hard to get insurance, very expensive. Whether you were, if you were a condo, single family homes didn't have their rate increase until 2025. So what's happening to those of us who have a single family home, we're seeing, or an HO6 for our condos, we're seeing that increase anywhere from 20 to 70% increase. So you're going to be hearing people grumbling about the cost of their HO6 or the cost of their HO3 if it's a single family home. So basically, Lahaina kind of messed us up, and America did not help that year, because that year they had $95 billion worth of losses, and only $3 billion was Hawaii. But we got stuck along with everybody else. Now, in 2024, America only had about $60 billion worth of losses. And the insurance industry said, hey, you're doing very well, America. We're going to be reducing the rates. And when Lahaina hit, and shortly thereafter until April of 2024, the insurance industry did not know exactly what their losses were. They were thinking it was going to be $6.9 billion for Lahaina. Instead, it was only $3.6 billion. And of course, the reason for that is many of those homes in Lahaina and the structures were built by grandma and grandpa before there was building codes, single wall slapped together, so they weren't insurable. But so the insurable loss was 3.6, which they thought was going to be double that. So that's also when they figured out their rates in April, they're thinking, okay, we've got a $6 billion loss here, or almost maybe $7 billion. Instead, it turned to be a lot less. So the rates started to come down very fast for Hawaii. So 2025, well, the end of 2024, we're starting to notice for the first time since Lahaina that rates are coming in at 10 and 15% less than they were the year before. And that's excellent because we're thinking, my gosh, in 1 year it's coming down. It took Iniki 2 years. It took Eva 2 years before we started to see rates reduce. So we're very thrilled as insurance agents because it's going to make our life a hell of a lot easier. What happened then in January of 2025, we had the California fires. And we're thinking we just lost our 10% credit or our 15% credit. Fortunately for us, not California, they only had, out of that $200 billion loss on fire, they only had about $5.6 billion insured. The rest was on the backs of the people of California through the state fund. So the underwriters were telling us, don't worry, it's not going to affect you. It's such a small amount of a loss. And it didn't affect us. So our rates continued to go down. But in January, they really started going down. Well, there's something called the Hawaii Hurricane Relief Fund. And they've been working on it ever since Lahaina. And finally, in June of 2025, the Hawaii Hurricane Relief Fund comes out with cheaper hurricane rates for basically concrete buildings who have the first 10 million insured elsewhere. So this is basically firemen's funds policies. So we had a lot of condos, 375 of them, with only $10 million worth of hurricane insurance. All of a sudden, the price started to come down. We had one Waikiki condo. If they wanted to buy it on the standard market, the hurricane that they needed to fill it up, it would have been over $35,000. When they bought it from the Hurricane Relief Fund, it was $9,980. So, of course, the boards could say, we can now afford this. So they bought it and they became compliant. So what has happened starting June of this year, because of the Hawaii Hurricane Relief Fund, the rates for concrete high rises for hurricane are way down. Now, not all are buying it. I still have, as I said, about 100 that don't have hurricane, though more and more are buying it. And I've got many who are renewing now through the end of the year. I think by the time 2026 rolls around, maybe there will be 30 to 40 who don't have 100%, but most condominiums will now be compliant. You'll be able to buy and sell. Fannie and Freddie will be happy campers, and it's going to be great. So that's what I'm thinking is going to be, except for the 30 or 35 that still don't do it because they still say we can't afford this because they didn't budget right, even though we told them to budget for it. So this is a good thing that's happening to the real estate industry in Hawaii. And if we have another quiet hurricane season, which even though there's one out there, and I already have an insurance company telling me we're going to put a moratorium on Hawaii starting Monday of next week because the hurricane's out there, it's supposed to skip us by, and may it not turn and hit us. And if it skips us by, we still have a very quiet hurricane season. And hopefully next year in 2025, we might see another 10% reduction. So starting this June, because the Hawaii Hurricane Relief Fund came out with lower rates, the standard market who sells insurance, many of them said, well, we want to keep the whole complex. We'll match that rate. So even though we didn't buy it from the Hawaii Hurricane Relief Fund, it was the Hawaii Hurricane Relief Fund that caused the insurance marketplace to reduce the rates on many a condo. So if I needed 100 million or 150 million, I was paying HHRF rates. So it was a good thing that the legislatures did. And I know the guy the politician who was the main man behind it, I did a seminar with him. First words out of his mouth is he says, who ever heard of a bill passing and the very next day it's successful? I said, I got you beat by one. It didn't pass, it gets signed until July. I started writing policies June 1st. So it was even before it was official, we were able to write policies and save people money. Right now, we have about 25 policies in the Hawaii Hurricane Relief Fund, and we estimated that we've saved probably almost $1 million of premium that didn't have to go to insurance companies, but that is free, $1 million for the owners who bought this insurance to use to go out to dinner or whatever the case may be, because we didn't have to charge them $1 million more to be 100% compliant. So it's really a good thing, this Hawaii Hurricane Relief Fund. So if your politicians ask you about it, you tell them, yes, it's great because it's making life good. And it was the realtors who started this when Iniki hit the Hawaii Hurricane Relief Fund, because there was nobody willing to write hurricane insurance in Hawaii back then. And so the realtors put a big push on it. And that's, even though it's been dormant since 1992, we could resurrect it within a year and go ahead and use it. And it's been great. So they could do to both the realtors and the politicians on that one.
Excuse me,
So right
Sue, we
now,
do have a question in the chat.
good. I don't see any questions, so read it to me.
It
I
says,
have,
I'm curious when the fiscal year starts, if any, for the Hawaii Hurricane Relief Fund. Is it in June?
it started to sell policies in June. So what is the question now about it?
When is the fiscal year?
It is the fiscal year of the Hawaii Hurricane Relief Fund.
Yes.
I have no idea, but the rates are set. I mean, applications, they've got like 180 apps in there. So I don't think they're going to change rates on us. Is that what you're asking about?
I'm not sure.
Me neither. Person who asked that, do you want to speak up and let us know what, so we can help answer it correctly? No. Okay. Yeah, I'm not sure quite what that question is. But I'm not worried about the rates going up, if that's what you mean. They did, this Hawaii Hurricane Relief Fund did buy reinsurance, and they're using the money that we send in as premium to buy more reinsurance as needed. So it will not be on the backs of us here in Hawaii if something happens like what happened in California. But there's actually going to be insurance to pay for it.
Okay, so now there's another follow-up saying, just wondering why June something changed.
Oh, because the politicians closed the legislative session, the Hurricane Relief Fund got approved, the governor signed the bill, and it was like, go ahead and run with it. They bought the reinsurance, it was ready to sell. That's all why it was in June. Just took that long as opposed to January to get it all together. Okay. Think that answers the question?
Yes, thank you.
Okay. So they wanted, the next thing you asked me about was the savings on premiums and what's happening. The savings on, because so many condos last year in 2024 had to buy the full coverage, and many did, and plus rates were up even if you didn't buy full coverage, they assessed their homeowners. So when you go to sell something, you'll see an assessment if you ask about the maintenance fees, and more than likely that assessment was for insurance. Others who didn't assess borrowed from the reserves of the association that they put aside for spalling or repaving of the parking lot or whatever, and they use that money to buy insurance. You have to repay reserves within 18 months. Okay, you can take it out for an emergency only, which in paying insurance was considered an emergency. They checked that with their condo attorneys, and so then they went ahead and have to pay it back. So many did not see a reduction in their maintenance fees because they still had to pay back the reserves which they borrowed. Now with the prices coming down, in fact, I just did one yesterday, and there was a 52% reduction compared to the prior year. So of course, people are thinking, great, we'll get $200,000 back. Instead of it being $400,000, it's $200,000. We'll get that money back. We'll drop it into the reserves, but they're not going to reduce their maintenance fees because they still owe that money. Okay, but maybe when it's paid back, the assessments will go away. Maintenance fees may stay the same, or maintenance fees might go up because of electrical or some of the other things that affect maintenance fees, but the insurance will not be affecting it for first time in a long time. And of course, insurance affects it greatly. Now, if the hurricane comes, this is all gone because we'll be back to square one again with a hit on Hawaii and our rates going sky high. But right now, things are looking very good. And many of us who own condos are very thrilled because we know the assessment's going away as soon as because for most of us, it was an annual assessment. Some did it in 6 months. We know that once we paid that, we would just have our maintenance fees. And with the insurance coming down, the maintenance fees won't be going up that much. They'll still go up for some things, but not because of insurance. So that's a good thing that's happening as far as the premiums go. So these owners are thrilled. And as I tell owners, the best way to keep premiums down is to monitor your complexes to be in the best of shape. In other words, you don't want to have holes in the ground that people slip and fall. You don't want to have spalling. You don't want things that could create claims. So keep your gates locked, make sure everything's in good maintenance of your complex. And of course, if you're a high-rise condo without sprinklers, putting in sprinklers will save about 40% of your premium dollars. I did Kahala Towers, was going to non-sprinkler building built in the 60s. And they either had to pass the life safety equivalent test or they had to put in sprinklers. To pass the test was $3.7 million because they had to put firewalls between each floor. Because when it was built back then, you didn't put firewalls. If the fire started one floor, it just goes right up the other through the garbage chutes and things of that sort and all the pipings. So to do it, it was very expensive. To put sprinklers in is about $7 to $8 million. So even though they don't have to do it, the board's pushing the owners to put in sprinklers. Once they put those sprinklers in, their premium will go down 40% because I had the company quoted as a non-sprinkler building, which it is, and as a sprinkler building, which it will be someday. And 250 Ohua on the Alawai just finished putting in their pipes and sprinklers. They were a 56-year-old building, 10 stories, cost 4.7 for pipes, and to add the sprinklers at the same time, this is what I'm pushing for, they did it for another 1.7 million, and they just finished it like 2 weeks ago. And so now their premium will go down on renewal because they actually have a sprinkler system. So the insurance companies give great credit for a sprinkler system because they know it will put out the fire, it will save lives. So that's a big to-do for any of those. So I always tell realtors, if you see a maintenance fee or an assessment, ask what it's for. If it's for sprinklers, that's a good building to get into because its premium's going to go down. They're going to be up to snuff as far as everything that they need to have to move forward. So that's the savings that we've been seeing on sprinklers, with buildings who do sprinklers and insurance in general. Hot
Yeah.
questions. Go ahead.
Yeah, we have another
Good.
question or two here. Just a moment as I expand this here. So it's kind of a longer one. What about Puna lava destruction in 2018? Insurance has been a problem there a lot longer than 2023. It is very difficult to sell properties in Lava Zone 1 and 2 with the cost of insurance running as much as $8,000 per year. There has been no help other than HPIA, which just raised their rates.
Correct. HPIA is a state organization. They've been insuring that area because nobody else will. As they have losses, the reinsurers, who we all buy insurance from, raise the rates to the state. So you're saying it's $8,000 for a home in the lava zone? People who, and it is, but unfortunately, you're paying $8,000 knowing someday, more than likely, your home eventually will go up because the volcano is going to explode and we're going to have a problem. So all you're doing is saying it costs, my home's worth 500,000. I got to pay 800,000 to protect it because someday, maybe it's 10 years, maybe it's 20 years, and I spent, 80,000, 160,000. My home is still going to be worth $500,000 or whatever it is. And if I wanted to insure, there's no other option. Nobody will insure it. You can take a chance if you don't have a mortgage, but many of us don't want to take that chance, even if we don't have a mortgage, because it's an asset. So there's nothing we can do about the volcano area. Nobody has ever insured it but the HPIA. And for some people, that's the land they own. It was given to them, and they've had it in their homes generations for years. And that's where they're going to build their home. And there's no way to guarantee that lava is not going to affect that house. So I have no solution other than to say, bite the bullet and you'll have to pay for it if you want to insure your home. Nobody wants it, unfortunately, but that's the reality of the situation with lava 1 and 2. We just lost all those homes. Now, there is somebody that sells a policy that if you have a mortgage that doesn't cover lava damage, a lot of good that does you, but it will cover a normal fire, lightning, windstorm, all the other perils, but it won't cover damage by lava. And there were people who had that policy, but unfortunately the lava is what killed it. And so, I don't know what to tell you other than it's like California. You want insurance, you're going to pay through the nose for it. If you're going to be building in an area that has the fire losses in California or the lava losses in Hawaii. Sorry, bad news, but that's the reality of the situation. Any other question? Because I don't see them, so. No? Okay. So the next question was risk mitigation. Steps homeowners can take to prepare for changes that protect their property. Maintenance, people, huge with insurance companies. I did a complex couple months ago that said your premium is like 1.2 million. I said, but you have never told me if you've done any maintenance issues. What have you done in the last 10 years to keep your complex up to snuff? And they gave me a list of about 20 items. And I sent that to the underwriters. And I said, hey, look, take a look at this one again. Here's all the things they have been doing to make sure their complex of 45 years is in good shape. And when they saw the list, they reduced their premium by $202,000. So maintenance is huge with insurance companies ever since that Florida condo collapsed. They're concerned with high rises about the spalling, because that's what mainly caused that Florida condo collapse. They knew for 15 years they had a spalling issue, and they did nothing about it. So spalling's big with insurance companies, just general maintenance. I mean, and you can go drive your car down the LOI and you can see which buildings maintain and which those that don't. You know, I don't care whether it's the landscaping, the paint job, the cracks in the parking lot. Those are all things that need to be maintained. And we are supposed to have reserve studies that now go for 30 years. And the reason, this is the first year that they've allowed 30-year reserve studies, and they've allowed you to actually put in sprinklers to save money for sprinklers for the high rises. So I always tell boards, even if you're not planning to do sprinklers for 10 or 15 years, start to save now. Put some money, I don't care if it's $100 per owner, into a sprinkler reserve fund, because there's going to be a time when you're going to have no choice but have to put them in. So maintenance is what counts, and improvement of keeping the complex up to snuff. The insurance companies look at that, and they're going to rather write a building that maintains than one that does not. So things like, when's the last time your roof was inspected? You know, there's some condos that have never had their roof inspected. I mean, I say, do you have it on a contract? Does somebody go up once a year to make sure everything looks okay up there? No, never been up there. We don't know what's going on. Get a contract. Those things help when we go to market. If I can put to my application, oh, there's contract for roofing inspection. Here's the person who did the termites 5 years ago, and here's a contract that did this. The more we can send to prove you're caring and taking care of your complex, that's the insurance company wants, because they'd rather insure a building that is well maintained than one that is not, because we're obviously going to have more claims on a non-maintained building. So again, maintenance is huge. And for those of you who own condos or live in them or are on a board, these are the kind of things you should be looking for to make sure that your complex is going in the right direction. Because if you take care of it, the insurance company will give you a break on your premium. And there'll be more people wanting to write your complex, as opposed to us trying to find somebody, begging somebody to take you on. Okay, so maintenance is huge.
Sue?
Yep.
So a question for homeowner insurance. We are starting to see that providers will not insure for single wall construction and if the age of the roof is 25 plus years. Is that going to be permanent?
Yeah, more than likely it will be. But let me explain something. On the roof, Hawaii roofs don't last forever. We have lots of windstorms, not hurricanes, just heavy windstorms. And what has happened, and I have typical is I have a complex out in Mililani of single family homes, 52 of them. There's some windstorms out in Mililani side, couple of shingles blow off. The roofers, who I call wind chasers, literally go out to the homeowner, say, oh, I found these 6 shingles in your backyard. I'm going to file a claim for you with your insurance company and the master policy. And they'll file let's say State Farm has the HO6. I have the master policy. They file a claim. They fill out the form and everything, these roofers do. They go ahead and get a new roof for the HO6 deductible of $1,000 or $500. Out of 52 homes that I had, 27 got new roofs. Why did they get? Because they have, even though just little damage, it's wear and tear and it's old and you can't repair, so you have to replace. So on the backs of the insurance companies, we are replacing these $30,000 roofs, when in actuality, the roof is 25 years old and it needed to be replaced. But because a couple of shingles blew off, the insurance company is forced to maintain it, to put up a new roof because it can't be repaired. Hence, the insurance company says, how old is your roof? 20, 25 years, we won't touch it. You go get a new roof and we'll insure you for the next 20 to 25 years. So the insurance company lost big dollars on these roofers who were going around getting new roofs for these complexes or single family homes even. So yes, roofs are a big problem. And when you go, even if you're with a carrier and you sell the home and the roof inspector goes out and sees that your roof is old, the insurance company that had you is not going to take on the new owner. So roofs are huge. So I tell people I had to replace my own. You have to replace your roofs at 25 to 30 years. You're not going to get insurance buying and selling or somebody taking it over. Your carrier may stick with you, okay, but at some point, even they will say, your home is now 30 years, 28 years, 25 years. We want you to put a new roof on by next renewal, or we will non-renew. That's coming out also. Single wall homes, a little bit different. Single wall homes can get insurance. My daughter bought a single wall home in Aina. She did add on a second floor. She did change the electrical. She did upgrade the plumbing, and she put a new roof on. She had no trouble, even though most of it was single wall, because she had improved the things that counted: the roof, the electrical, the plumbing. Okay, everything else was like 50 years old. You know, Aina was built back in the 50s. Okay, so they wanted to make sure that the plumbing, etc. Well, she did all of that because she bought a home that needed to be remodeled. But she left the basic structure. The only thing that's double wall is the second floor, but all the rest is single. You can insure single wall homes. You must make sure the electrical, plumbing, and roof are up to date. And there are carriers that will write it. But if it is all old plumbing, old electrical, old roof, and single wall, forget it. You're not going to find anybody who wants to do that. If you're going to buy it, and if you're selling it because somebody says, I'm going to remodel it, okay, that's different. And if you can prove that you're going to remodel it within 3 to 6 months, not 2 years from now, they will write you. Not easy, but there are carriers out there who will do that for you. So when you sell a single wall home, be prepared. First of all, ask the current agent on the policy if the carrier will accept a new owner. Some do, some won't. And if not, what has to be done to make it acceptable? And a roof inspection by a roofer, saying that the roof is acceptable for another 5 or 10 years, will help. But again, how old is the plumbing? How old is the electrical? Those are the issues that bother the insurance industry. Okay.
Okay, we have another question.
Okay.
Uh, this discussion today has been a lot about condos and way condo associations can make a case to insurers to save on the monthly annual premium. Would these same tactics of showing care for the home be beneficial to a owner of a single family home if they want to state a case for reduced premiums? Is there a process for the homeowner to request a reduction in premium?
Yes, what you need to do is talk to your agent and say, oh, by the way, did I tell you I replaced my roof? Here's the contract, how much I spent, when it was done. Oh, and by the way, I did the plumbing, or I did most of the plumbing. Here's the contract. Here's what I spent. Same thing, electrical, plumbing, and roofing. Those are the 3 things the insurance companies are concerned about. If you can prove that you have a new roof or a roof within 3 to 5 years, and they didn't know that, they're going to want to insure you. You're going to get a better deal. So you have to maintenance, again, of maintaining, whether it's a condo or a single wall home, single family home, is what counts. And I take Aina because I go to visit my daughter. There are homes there that look like they've been empty. You know, no one's been living there for years. But no, there's people living there, but they just have junk cars and weeds all over, and they don't maintain. You can tell it hasn't been painted for 30, 40 years. Okay, that's the kind of home the insurance companies don't want. But if somebody were to buy that home, if it were for sale, I mean, these people are living in it. It's probably been their generational family home from day one, but they just let it go because they don't realize the asset that they have. And if they would try to sell that, and you and I were to buy it, we wouldn't be able to get it insured in the condition it's in. So yeah, we've got to take care, maintain. Same things, plumbing, electrical, roof. You show that to your insurance company, you'll get a break.
Okay, we have another question on that line. An issue we have on a sale is sometimes the buyer is unable to find out when the roof, electric, etc. was changed or upgraded because it was done without permits. Any suggestions?
Yes, you're going to have to call in an electrician to do an inspection, a roofer to look at the roof. You have to have a report. You're going to have to spend the money. And in fact, I would tell the owner before they even list the darn thing, buddy, there's no sense me listing this property unless you get the roofer out to give me an indication on the roof, get the plumber out to look at your plumbing, and get the electrician out to tell us that what kind of electricity you have. And if he's got federal or something of that sort, the kind that don't shut off and create a fire, it's going to have to be replaced, because, or else you're going to have to say it's going to cost $20,000 to refix the roof and $30,000 for the plumbing and 20 for the electrical. Add that up. The house should sell for this, but because of all these things, we have to offer it at this reduced rate, because that's the only way it'll sell, because nobody's going to take it on. I mean, we had an elderly friend pass away. She left us in charge of selling her estate. So we had no idea when anything was done. She had a very nice veneer tile roof. The guy went out and said, you got about 10 years left. The plumber said, well, the plumbing's kind of old, but it's in decent shape. So anyway, she let the premium lapse because she was with USAA and she was elderly and Alzheimer's, whatever. So we had to beg somebody to write this piece of property so we could sell it. Instead of it being a standard premium, like $1,000, $1,200, we found somebody to do it for $4,500, better than no coverage. And it was going to be a short-term policy until it got sold. So the person who bought it, we said, here's the roofer's report. It's not going to last you very long. Here's the electrician's report. Here's the plumber's report. You'll need to get these things done. We've reduced the price of the house by this. And they bought it with the indication that and they already had a contractor set up so they could show their carrier, we're going to get this done within the next 3 to 6 months. So they were able to get a homeowner's policy on it. So that's the kind of thing you're going to have to do. Been there, done that. Any other questions?
Yes, we do. Just a moment.
Okay.
All right. For those on the call, State Farm has been really strict about roof age and single wall construction. They stopped new policies in February. Allstate, no Kokai Insurance Professionals has been pretty lenient about writing new policies for these kinds of homes. Contact their Hilo office for assistance if you have a transaction with a home that fits the old roof, single wall construction parameters. I guess that was a comment, but now
Right.
we heard it too. So.
And they're good comments. The problem is you have to understand State Farm has the cheapest policy. I don't care whether it's an HO6 or an HO3 for your house. They don't anticipate paying claims, so the rates are too low. And of course, they've lost a lot in California, so they're trying to raise the rates in California. And of course, State Farm is, United States wide, and they constantly have to cut back. If you have more than 2 claims, they don't renew you. And then all the other HO6 companies don't want to take on somebody that already has 2 claims. So it's very difficult to have a company cancel you and find replacement coverage. And because we have a lot of old pipes in our condos, for example, Crum & Forster, who used to write HO6, stopped. This is by the end of September, they will not have one HO6 on their books. State Farm rather said 2 claims or more, and anything within 1,000 feet of water, and the water could be the Alawai Canal, we're not writing you. We're going to non-renew you. First Insurance allows 1 claim, but if you have 2, they're going to probably non-renew you. Liberty Mutual said Allstate will write owner occupants, but no longer landlords. And then Liberty Mutual is still writing if you have 1 claim. AAA will write you, but 1 claim, but you have to be an owner occupant. They won't write a landlord. So there's all these things affecting us who buy insurance, and different carriers have different rules. And as they lose money on this, like Crum & Forster for 4 or 5 years, kept on trying to raise their rates with the insurance commissioner so they could make money on their HO6s. And instead of getting the 60, 70% rate increase, they wanted to give them 20. So they finally just said, we're done. No more HO6s. We're out of that business. And as more and more leave like that, it makes it more difficult for those of us who need a policy, because the other carriers are saying, we don't want you. But the state is coming up with an HPIA that does the volcano homes. The volcano is coming up, hopefully by year end, with an HO6 for us condo unit people who can't get coverage, because there are certain buildings that are blackballed. No carrier would write a policy in there because of the issues. A lot of them are those kaka'ako condos because of all the pipe claims, the water claims. So we need the HPIA to come up with this HO6. They're working on it. There's talk about by year end. So if you know somebody, yes, run to that person who will help you. And I tell people, pay your premium. Don't grumble that it would double. Just be happy somebody's offering to renew you, because a lot of people aren't getting renewed. Questions? I think I've used up all my time. Oh, yeah.